All right. Today's Thursday, the 23rd of January. This is a recap for the stock market activities today. And folks, I got a good one for you tonight. Let's begin with the tape a little bit because the number one question is, what happened, Maverick? Are we going to get a pullback, or are we just going to go crazy with this market in a straight line and never get a pullback? What happened? It is important to understand the mechanical aspect of the tape. So we opened gapping down, and you saw that the momentum was shifting. We were about to go down as anticipated because the market maker wanted to neutralize some of the calls. But then came the Trump conference, and it caused a pump in other sectors besides AI, let's say the industrials, the Trump kind of names, based on the announcements and the policies that he was floating out in the conference. And that caused the market maker to be squeezed at the end of the day to the upside because Apple was weak today, NVDA was weak today, the VIX was going higher. So everything was playing out according to plan. But then came the improvement of the breadth in the aftermath of the conference of Trump. And I think that's what caused the squeeze that you saw at the end of the day. So we said in Discord that today's ideal close for the market maker would be below 607. And we'll explain why in a minute. But if we keep trading above 607, then the market maker will have to close just below 610. And you see here the 1 minute chart in the SPY, huge pump at the end of the day that got us just a touch below 610. And we've been trading above 607 since, let's say, half of the day. The first half we've been trading below, then second half we'll be trading above. So the market maker came up with the conclusion at the end of the day that it's better to squeeze higher to hedge because there is risk that in the aftermarket session, let's say if they closed at 607 and a half, then all of a sudden, what if the market goes higher post-market and we head to 608 or 609? Because we have earnings coming out of the post-market session. So the market maker put two and two together and decided to squeeze all the way to hedge against all of these calls, but stop short of the next highest number in open interest, which is 610. I'll show you in a minute, but bear in mind, don't be surprised that we could wake up tomorrow with a gap down or a tape that trades down throughout the session, because we're now talking about options, expirations, and gammas and all of that. I'll give you an example here, not so far, by the way. We go back to December. This is the 1 minute chart. So you can see in the session that I'm highlighting, huge pump at the end of the day, then a gap down and trading to the downside during the next session. Let's go back to the end of December. Again, you see another pump before the end of the session, and then we see a gap down after that. So don't be surprised to see that, and I'll show you the reasons here. If we look at the calls and puts for today's expiration, so that's already done, kaput, it's over. This is all expired right now. What was the highest number of open interest upon the open, meaning the highest risk? We call that the wall. The wall was 610 because it had over 22,000 contracts open. But what is the immediate risk that the market maker needs to neutralize? The answer is the highest number of change in OI nearest to the price. A little bit complicated, but in a nutshell, you look at the OI change, 10,000 contracts at the 607. So that was the nearest number with highest open interest that changed overnight. So that was the point where the market maker wants to go to 607 and then stop below. And that was the maximum pain of the day, because if you look at the puts, it's the same thing. A lot of puts opened overnight, but the nearest highest number of both open interest and change of open interest was around 607. So it was the sweet spot to close in, to exercise maximum pain on both the puts and the calls. And at some point throughout the day, by the way, the calls the majority of them were losing a lot of money, even the ones that were already in the money. And so did the puts. So at some point, they did achieve the maximum pain that they wanted. But then there was the risk of, wait a minute here. I mean, we see the 608 calls, for example, 13,000 contracts to open overnight. We still have 17,000 contracts open. Some of them, of course, changed throughout the session. Maybe the number is less or a little higher, who knows. But there was a lot of risk, and this is why they had to push it all the way to neutralize 608, 609, and then stop short of 610, which has the highest number of OI in the calls and the highest OI change overnight. What could happen in tomorrow's session? Too early to say, but if we look at the puts, who knows how the OI change is going to be, because this is the expiration date of tomorrow. But if I'm reading the tape correctly here, 605 could be the sweet spot, because what's going to happen today is a lot of puts closed. So you see the 11,000, 12,000 almost, the open interest in 605. Probably that was reduced overnight in a big way. But then you look at the calls that were bought through the session today, added the money with the expiration date tomorrow, you're probably going to see a huge increase. So probably the market maker wants to move the tape down to exercise maximum pain now on the call side that were bought today. So again, too early to say. We'll assess that in the morning tomorrow, but you got to understand that today was a lot of mechanics, because even if you look here, we're pinning the SPX in white, the S&P, and then you got the TLT in orange, and you can see that we have correlation. Bonds and stocks are moving together. Why do we see the lack of correlation here where the TLT goes down, the SPX goes higher? A lot of mechanical aspects going on. And the AI pump that we got 2 days ago. But sooner than later, if we just roll back, you can see that we see divergences when the market goes higher, but TLT goes down. But sooner than later, they catch up with one another. And in the last two examples, the market did catch up with the bond market. So you saw a little bit of a pump, but then the market gave up and caught up with the movement in the bond market. Likewise, if we look at the RSP, the equal weight S&P 500 in white, and then we look at the TLT once again in orange, you can see that there is correlation. But why do we see a break in the correlation recently? I think we have a lot of mechanics going on, a lot of Trump optimism, a lot of divergences, but they're going to catch up with one another. Either the bond market is lying and it's going to move higher tomorrow, or usually the bond market doesn't lie. And we see equities catching up with the bond market. So keep that in mind. But let's go to the main event of the day, which kind of changed the mechanical risk. That's the Trump conference that we got today. Of course, the cult is meeting at Davos. He was not there, but he addressed the cult via teleconference, and he said important things. The media took the headlines. Oh, Trump said he's going to do this, he's going to do that. What I'm going to do is something different. I'm going to stitch the entirety of the economic paradox, because it was an amazing conference by Trump. Not amazing because the policies are great or anything, but amazing in terms of outlaying his economic policy with extreme clarity. There is no doubt what this man wants to do economically. I think it's going to be a disaster at the end of the day, but there is a method behind the madness. So let's decode it one by one. What is the problem in the economy? Here's President Trump identifying it. Take a look.
Because of these ruinous policies, total government spending this year is $1.5 trillion higher than was projected to occur when I left office just 4 years ago. Likewise, the cost of servicing the debt is more than 230% higher than was projected in 2020. The inflation rate we are inheriting remains 50% higher than the historic target. It was the highest inflation probably in the history of our country.
Okay, so the problem is we have high inflation, we have budget deficit, and we have high interest payment on the debt, meaning that we need to do one of two things. Either reduce spending, which he didn't really talk about. I mean, there's Doge and there's some initiatives, but what is that going to cut? 100 billion, 200 billion? That's not a drop in the bucket. That's nothing. So the other approach would be, okay, maybe he's going to increase the revenue side. He can only increase the revenue side by increasing taxes. But here's what Donald Trump proposed. Take a look.
Are going to pass the largest tax cut in American history, including massive tax cuts for workers and family, and big tax cuts for domestic producers and manufacturers. And we're working with the Democrats on getting an extension of the original Trump tax cuts, as you probably know, by just reading any paper.
So he says we have high inflation, we have high budget deficit, and we have a high debt payment. It's now over $1 trillion. But he wants to cut taxes too. That's going to reduce the revenue that the government receives. That doesn't sound like any logical economic policy. Unless you're going to reduce the spending by a lot. You're going to do austerity measures. You're going to reduce $1 trillion, $1.5 trillion in spending. That's going to cause economic recession. Where are you going to cut? Defense? Social Security, Medicare, none of that going to happen. Doge is probably going to cut maybe 100, 200 billion if they're lucky, but that's about it. The tax cuts will probably add $2 trillion to the deficit and the national debt. So you need to increase the revenue. You need to compensate for the loss in revenue by the tax cuts with another source of revenue. Well, the president proposed that this is the way we're going to substitute the loss in revenue from tax cuts with, you guessed it, tariffs. Take a look.
But if you don't make your product in America, which is your prerogative, then very simply you will have to pay a tariff, differing amounts, but a tariff which will direct hundreds of billions of dollars and even trillions of dollars into our treasury to strengthen our economy and pay down debt.
Now, look, you can go back to the first term of the Trump administration. All of the tariffs produced barely a drop in the bucket, maybe $150, $200 billion, but that's it. Is that really going to compensate for $1 trillion $2 trillion worth of tax cuts and reduction in revenue? I don't think so. So you might stop right here and say, you know what, Trump doesn't know what he's talking about. His economic policy doesn't add up. But the president has another trick up his sleeve, which is the reduction of interest rates. How are we going to do that? Take a look.
With oil prices going down, I'll demand that interest rates drop immediately, and likewise, they should be dropping all over the world. Interest rates should follow us.
So he says we're going to demand that interest rates drop immediately. In other words, he's saying I'm going to go to war with Jerome Powell at the Federal Reserve. That's going to cause a lot of chaos. But the most important thing that he said, he might go to war with Powell and fire Powell, and it gets really dramatic and ugly. But he said something before, which is we're going to drop the price of oil. If the price of oil goes down, then there is no inflation risk. And if there is no inflation risk, then what's the harm in dropping interest rates further? Of course, we explained before that if you cut interest rates, oil will go higher by default. But he thinks here that he can keep oil prices down, keep inflation down, and there is no need to go in a war with the Federal Reserve, because with this dynamic, the Fed will just continue to cut rates. How is he going to drop the price of oil, though? Take a look.
And it's also reported today in the papers that Saudi Arabia will be investing at least $600 billion in America, but I'll be asking the Crown Prince, who's a fantastic guy, to round it out to around $1 trillion. I think they'll do that because we've been very good to them. And I'm also going to ask Saudi Arabia and OPEC to bring down the cost of oil. You got to bring it down, which, frankly, I'm surprised they didn't do before the election. That didn't show a lot of love by them not doing it. I was a little surprised by that. If the price came down, the Russia-Ukraine war would end immediately. Right now, the price is high enough that war will continue. You got to bring down the oil price. You got to end that war. They should have done it long ago. They're very responsible, actually, to a certain extent, for what's taking place. Millions of lives are being lost.
So in essence, the economic policy is we're going to bark at Saudi Arabia and threaten them. If they don't increase the production to drop oil prices down, what are you going to do? What is the incentive for Saudi to increase the production right now and destroy their economy by reducing the price of oil? Because Saudi has a budget deficit of $27 billion. They need to increase their revenues to fulfill the diversification dream and projects out of oil by 2030. If they increase the production, that goes contrary and hurts Saudi Arabia. Are they going to really hurt themselves? I don't think so. Unless there is a reward, the carrot that the Trump administration will offer to Saudi Arabia. What would that be? Say Saudi Arabia adds another $50 or $100 billion to the deficit just to please the Trump administration. What are they going to get out of it? The answer is there's nothing we can really offer at this point. Nuclear program? Maybe. But the likelihood is, and you saw the last statement when he blamed Saudi for the war in Ukraine. That was a huge statement. That was big talk. And there's a lot of nervousness right now in Saudi Arabia overnight because of that. In other words, Trump is not going to offer any reward. When he said, I'm surprised they didn't drop it once I got elected. He's going to offer a punishment, the stick, to Saudi Arabia if they don't drop the price of oil by increasing the production higher. Gee, what would the stick be in this case? Supporting the Houthis in Yemen, who've been bombing ships and causing trade chaos in the Red Sea? That's stupidity. That's not going to happen. What else are you going to do? Support Iran? That goes counter to any logic, really. So my question is, what is the incentive for Saudi to do anything here? When they have $27 billion in budget deficit. And here's the other headline: Saudi Arabia slashes growth forecast, sees wider budget deficits. We already talked about that, but here's the reality for you. Saudi real GDP is expected to grow 0.8% this year, in a dramatic drop from a previous estimate of 4.4%, according to the Ministry of Finance. Saudi authorities also expect that the budget will remain in deficit for the next several years, as the kingdom prioritizes spending to achieve the targets of the Vision 2030 Economic Diversification Program. Saudi Arabia's fiscal break-even oil price, listen to this, really important, has increased and may continue to rise as oil prices are expected to stay subdued. I don't think they're going to stay subdued if we continue to cut rates. So let's backpedal just to uncode the path for the Trump economic policy. He's going to add pressure on Saudi. Saudi is going to increase the production. Oil prices go down. With that, the inflation risk goes down. And with the inflation risk going down, we're going to be able to drop interest rates and reduce the debt payment, which will allow for tax cuts. And then on top of that, you add tariffs, and now you're reducing the hole in revenue done by the tax cuts. With this dynamic, you achieve a higher stock market, you achieve an economy that is still going, and you achieve less inflation, you achieve less debt payment, so you can add more to the debt and grow a little more. That's the paradox. There's a method behind the madness, but it all relies on what is the incentive for Saudi. We've seen in the past when Saudi Arabia increased the production, we've seen oil prices going down for a little bit, but at the end of the day, if there's an inflationary dynamic in the economy, and the U.S. bond market expects higher rates because of the inflation threat, oil bounces back. So again, I think this is an economic policy that depends on a lot of geopolitics and a lot of threats and using the leverage. The president right now, everybody's kissing his ass. I mean, Saudi said, yeah, we'll do whatever. He said, they're going to do $600 billion. I'm going to ask for $1 trillion. They got a budget deficit. They can't spend $600 trillion or whatever you're floating there. It's the same Fugazi number that he did with SoftBank. Never going to happen. All of these things not going to happen. But of course, it's all talk right now to fluff up and manipulate the market and the economy and just give everybody the optimism that he's doing something. But the point being, the Saudis did not really issue a statement against it. Oh, we're not going to we're not going to increase the production, or we're not going to spend $1 trillion. They just said friendly statements right now. And you see the tech oligarchy, for example, kissing Trump's ass. Everybody's right now kissing Trump's ass. Why? Because he got the supermajority. He can do whatever the fuck he wants right now. Got the Congress, got the Senate, got the Supreme Court, and that's why they're afraid. But that's going to change once we head to November, or we get midterm elections, and things could change in Congress. All of a sudden, the president loses his power. So that's important for us to understand, that the Trump economic paradox could work in a short period of time, but then it's going to backfire. What else in the Trump economic policy that is worth mentioning? There are two things. Number one, of course, the AI investment. So now he says, I'm going to do the tax cuts. That's going to reduce the revenue, but watch out. We'll increase the tariffs. That's going to make up for at least some of the lost revenue from the tax cuts. And oh, by the way, we're going to have foreign governments and foreign companies investing billions, trillions, just throw numbers out in AI projects. Take a look.
SoftBank has announced between a $100 and $200 billion investment in the U.S. economy because of the election result. And just 2 days ago, Oracle, SoftBank, and OpenAI announced a $500 billion investment in AI infrastructure. Other companies likewise have announced billions and billions and billions, adding up to trillions of investment in America, in the United States.
Now, we talked about this yesterday, that the Stargate AI Fugazi project will never happen. And Elon Musk accurately pointed to that fact. Of course, he has a beef with Sam Altman. That's why he's butthurt right now. But he pointed out correctly that there is none of these companies have the cash to fulfill the promise of the Stargate project. So here's Forbes saying inside the Stargate's AI reality distortion field. And they point out to the problem with all of this AI promise, that companies overinvested in AI, and now they're kind of questioning, are we really going to see benefits from AI? What are we trying to do here? Because it seems to be like a FOMO kind of spending, with the companies that are competing with each other because we have shortages in the chips in NVDA, and whose company going to do what in AI. But you saw the problem with, for example, Google AI today, dropping Biden as president altogether. So we have a problem with the generative AI. And listen to what they say here. This comes at a time when our research shows that enterprises are in the early days of figuring out what to do with it, meaning AI. Consulting firm McKinsey recently estimated that 65% of surveyed firms were using generative AI and gaining business value out of it, although the exact returns on investment remains unquantified. If you catalog the many remaining questions about Stargate as well as the fuzzy nature of the AI market, this might be the most speculative business announcement in White House history. And here in this paragraph right here, in a nutshell, they say if there's a huge AI announcement, a project by the White House of $500 billion to $1 trillion, shouldn't Jensen Huang, the top name in AI, the most important man in AI right now, shouldn't he be present? Otherwise, what is the legitimacy of the project? Or is this sort of a Trump making some billionaires jealous of other billionaires to see who's going to kiss his ass the most and who's going to contribute to his campaign and his finances the most? Keep that in mind. Why pin Elon Musk against Sam Altman? I think the man knows what he's doing. He knows that Elon is in his pocket. He's been kissing his ass throughout the whole thing. Already scored $200 million from Elon Musk. So now Elon Musk is the clingy boyfriend. And he says, you know what? You stay I'm going to ghost you right now. Elon, go fuck yourself. I'm going to find another hotter boyfriend here in Sam Altman to make you a bit jealous. Or I'm going to have Larry Ellison, not Microsoft. Or I'm going to have SoftBank, not NVIDIA. That could be the game here. Anyhow, continuing with the article here, the Wall Street Journal, in the meantime, points out that SoftBank has about $30 billion in capital. That means they'd have to raise additional $470 billion for the project Stargate. Where's that going to come from? Saudi Arabia, right? It's just Saudis all of a sudden have more money than the Federal Reserve. It's absolutely absurd. Anyways, let's put this in more context. Microsoft, one of the largest companies in the world with $3.3 trillion in market capitalization, has only allocated $80 billion to AI infrastructure investment this year. So really, SoftBank will come up with $500 billion? Where's that money coming from? It's phony. It will never happen. Anyhow, the only part of the web of intrigue, Oracle, also featured in Stargate and at the press conference, is a fierce rival with Microsoft, which was left out of the media party at the White House. Really important. Though Microsoft is named along with NVIDIA, Oracle, and ARM as technology partners for Stargate, and Microsoft has a significant financial interest in OpenAI, where it has invested tens of billions of dollars. Hey, it is a gigantic game of multi-billionaire poker. Who's gonna win? ? I agree. This is all bullshit. This is all a game to make the billionaires penned against each other. Who's going to promise more? Who's going to kiss ass more? Continuing, but what is the business model behind Stargate ? Will it compete with the Core Weave for GPU as a service, or will it compete with Anthropic and Google and Meta on training or IWS for services ? It is unknown. They did not say. Oracle's Larry Ellison, who's by his young appearance at the age of 80, my favorite billionaire, by the way, at 80, you're dating chicks who are like quarter your age, right? That's the way to do it. But anyways, might do well as a spokesman for the Fountain of Youth. His strategy, by the way, if you bang a younger chick, that makes you younger. Anyways, they believe in that kind of thing. Anyhow, he did make some eloquent statements about training for drug discovery, of all things, because he wants to be, right, forever young. But it's not, why do we need drugs, right? Just bang younger chicks, you'll stay young forever. Anyways, but it's not clear if that's just an example of one potential application. It's fugazi. It will never happen. And I doubt that Saudi is going to somehow increase the production of oil and drop the prices and hurt themselves. I think that's going to be tougher. What else do we have in the Trump policies? How about increasing spending by NATO? Take a look.
I'm also going to ask all NATO nations to increase defense spending to 5% of GDP, which is what it should have been years ago. It was only at 2%, and most nations didn't pay until I came along. I insisted that they pay, and they did, because the United States was really paying the difference at that time, and it was unfair to the United States. But many, many things have been unfair for many years.
Now, this one going to be pretty good for defense contractors. So you saw RTX, Raytheon, huge pop in the last couple of weeks, and I think we have more to come. So you want to add exposure to the defense sector, folks. We've been saying this for years now. Another name is HWM. I mean, this stock is on fire. We covered some unusual activities a few weeks ago, and look at the pop that we got since then. That name remains on fire. Another name is KTOS, Kratos. It was added to the Maverick portfolio last year, and it was one of the top performers. Still going. No stop in sight. Now, you can invest in an ETF if you don't want to place all of your eggs in one basket. That could be a choice of the ITA, for example. That's a defense, aerospace, and defense ETF. Another choice could be the XAR, also tracks the same names, but I do favor the XAR over ITA. I'll show you why. If you look at the components of the ITA, about 18% in GE. GE been going higher, but who knows how long it will stay high. And then RTX about 15%. So you're putting a lot of eggs in two baskets here of GE and RTX. And this is why I don't like this ETF. I like the other one, XAR, because sure, it has speculative names like Rocket Lab, for example. But it's only 8%. We have other distributions in Boeing, and Raytheon, and Lockheed, a lot of aerospace and defense plays. So I do like the XAR a little better than the ITA, but both of them will do. The point being here, add some exposure to defense. Now, before we move on to the market information, folks, let's revisit the morning brief because it was an awful one. I got it wrong today. It happens once in a while, folks, in a nutshell. But there's something that I got right, which will be relevant for tomorrow and for next week. So we talked about how the key to the market today would be Apple versus NVIDIA. We've noticed recently that if Apple goes down, NVIDIA goes up. If NVIDIA goes down, Apple goes up. So recently, Apple became oversold. NVIDIA became overbought in the short-term charts. So the suggestion was, looking at the pre-market charts, that we could see in this session Apple going higher, NVIDIA going down, and that keeps the indices a little bit afloat, but maybe a little bit of weakness depending on how the VIX reacts. I showed you this chart in the morning, Apple hourly chart, suggesting that if we break above 225, we could go all the way to the gap fill, and that will give us a trade. And of course, that's going to come at the expense of NVIDIA. But here's the update. We got a touch above 225, then flushed down again in Apple. Does that mean that Apple is going to go down tomorrow or next week? Be careful, because I'm going to show you the chart. In the charts analysis, there's something that you have to understand before you do these decisions. NVIDIA, this is the chart that I showed you in the morning, that the important number is 145. If we stay below, then NVIDIA goes down, Apple goes higher. Here's the update. It didn't last for too long. NVIDIA made it above 145 and actually outperformed Apple today. But the point being, folks, here's Apple in white, NVIDIA in green, 5 minutes chart. You can see that there is a bit of inverse correlation from the arrows that I'm drawing in the chart right here, that when NVIDIA goes higher, Apple goes down, and vice versa. So today's session, NVIDIA goes higher, Apple goes down. The point being is, at some point, Apple is going to get really oversold. But Apple is not going to be able to rally or move higher without NVIDIA giving up. So this is a dynamic that could be really juicy for a trade if you can spot it and time it correctly, which obviously I did not do today. Anyhow, let's add more color to this conversation by revisiting the market activities today, beginning with the closing of the indices, and here we go. The diamonds, that's with the improvement of breadth after the Trump conference. You can see that we opened lower on the Dow, but immediately after the conference, it caught a bid. So the Dow was up by 408.34 points, or a gain of 0.92%. The Nasdaq, again, was the underperformer, red for the majority of the day until the end of the day when we seen a pump because of the mechanics around the SPY. So the Nasdaq managed to close positive 44.34 points, or a gain of 0.22%. The S&P also between the Dow and the Nasdaq, so it is positive 32.34 points, or a gain of 0.53%. The Russell 2000 performed today, even though the TLT was down, bond yields were higher. So I don't know if that performance is going to continue to last. It managed to close positive at 1.04 points, or a gain of 0.46%. Looking at these sectors all in all, healthcare making a big comeback today. Number one, industrials remain hot based on the Trump trade. Some sectors acting as if yields went down, by the way, such as utilities, real estate, bouncing higher. We'll see if yields continue to move higher in tomorrow's session, then they're not going to hold. And technology, of course, the laggard, be it a touch positive. In the aftermath of the Trump conference, we've seen the breadth improving. So the NYC closed with 62% advancing, 36% declining. The NASDAQ, 56% advancing, 41% advancing. You can see it in the heat map here, folks. The rest of the market, financials, healthcare, industrials, some of the utilities, the metals, the defensives, the cyclicals, were outperforming today. But the stuff that outperformed yesterday, the Amazons, the Googles, the big caps, were underperformers. In some of the chip components from the Stargate project that caught a bid, like ARM is down about 7% today, Micron down about 4%, the manufacturers like ASML, AMAT, all of them pulling back. So it's interesting dynamic that you keep the index afloat by keeping one of these two components outperforming by a lot. Yesterday was the big cap names and the AI names. Rest of the market was down. Now they switch it to, rest of the market pumps higher, AI and the big caps take a break. That's the rotational aspect of the market. And so long as it continues, it keeps the indices afloat. But you need to see the indices going down in a reliable way. You need to see an increasing in what? In the VIX. In hedging. An increase in the VIX will cause a sell-off across the board in the map. We have earnings coming out soon. You only need one bad earnings to send the alarm through the investors community that, hey, it's time to hedge. Keep that in mind. Looking at the heat map for the ETFs, TLT down, so yields went higher. Why is the IWM, XLU, IYR, XBI Biotech trading higher? All of the yield-sensitive names trading higher. XRT, with the exception of the KRE regional banks. A little bit of divergence here. We'll see if it's going to last or not. The dollar was up a little bit, but we see an impact. Crypto's down, GDX gold miners down, silver down about 1%. So at least there's correlation with the dollar going on. If we look at the breadth today, see the NASDAQ being outperformed by what? The RSP, dividend-paying stocks. You can see the value IWD, VTV, outperforming large cap growth. But both of them performed together. We're positive today. So it's really hard to knock the index down if you have both of them working out together. The index goes down better if we see major underperformance by growth, because that's where the concentration of weighting is, or weakness in both of them, growth and value. But if you see weakness in value but growth stays hot, the indices keep going higher. It makes it tougher, right? It makes it tougher for the market to pull back with this dynamic. So again, you need to see sort of a scare. Can it happen from the Japanese yen? Can it happen from a policy risk? Can it happen from something to increase the hedging? And then we see a sell-off that is inclusive. Looking at futures and commodities, what do we see here? Crude oil tried to move higher today, but then came the conference and the threats by Trump that he's going to do this and that, and Saudi's going to do this and that. Why did the market took his word? Because it doesn't make sense. The Saudis will never do it. But the market took it seriously today. At least the traders de-risked and sold oil a little bit, maybe shorted a little bit. The reason is because Trump has the supermajority. And when you put two and two together, he could do damage to Saudi if he wants to. And maybe the Saudis will capitulate at least all the way till November. And that's why we see a move down in crude oil. But if we see a bounce tomorrow in crude, let's say moving by 1%, 1.5%, 2%, then the market forgot about it, digested it, and said, you know what? We don't think that's going to happen. Why would the Saudis hurt themselves in dumping more oil in the market? Now, softs remain hot, so if the president is just concerned about energy prices as a reflection of inflation, watch out because other commodities are moving higher. So OJ is up about 2%, coffee 1%, sugar about 3%. Of course, oil is more important than these commodities. But needless to say, even grains are now moving higher, like soybean oil, corn, soon enough wheat. You see meats at all-time highs, live cattle, feeder cattle. And today, we see that palladium beginning to find a footing, copper, not at the risk zone yet where we can cause inflation for metals, but the inflation is, I think the risk right now, energy and grains. Don't forget about meats too. Those three, what are you going to do? Increase the production in beef? Increase the production in corn or wheat? That's not as easy as, hey, let's just pump more oil. So I think that's going to be harder to tame in terms of inflation. Moving on to the big casino options, what do we do here? Volume is still subdued. I don't know why the volume, but again, I'm going to keep saying this, folks, that the ratio between the calls and the puts is alarming. It doesn't look good here. We see a little bit of increasing in put demand on Palantir. So Jim Cramer came out today and said nothing is going to stop Palantir. So the traders bought puts on Palantir today as a protection method or maybe betting against Palantir. So that's the only significant change that I see in the put to call ratio. But it's still excessive, and folks, the market maker has to do something here. They tried to do it today, but they got squeezed. They might try to do it tomorrow by a gap down or an aggressive flush, just to make sure that the positioning is more neutral, because this is way, way over-concentrated on one side versus the other. Any interesting changes in the IV rank? Not really. Again, the most attractive trade that I can find really is NVDA. You want to trade it up, you want to trade it down. It's the cheapest among all of these stocks that you see. Another attractive one is MSTR MicroStrategy. The option's been absolutely absurd in previous weeks, but now we have the IV rank down to 20. So relatively speaking, MicroStrategy is cheaper. If you think Bitcoin is going higher, maybe you want to buy some MSTR calls. If you think it's going to go down, maybe you want to shop for some puts. Let's do the unusual activities, beginning with a YOLO trade. This is not going to be relevant to you because it already happened and it's going to expire tomorrow, but it is telling about how the options market work out. Somebody bought the 1,000 calls for the expiration date of tomorrow on Netflix, spending about a little over $200,000. Now, when you see a squeeze after earnings because of a huge fundamental catalyst, such as we've seen in Netflix, you see a lot of calls accumulated, you see a lot of short covering, you see a lot of gamma happening in the aftermath of the earnings. But what happens is the market maker usually squeezes the name higher, comes options expiration because we have a lot of risk in positioning, that some calls could be in the money by expiration. So we see a little push higher by the end of the week. This is what the trader is betting on by buying the 1,000 calls for tomorrow. Then we got the KRE regional banks. Here, they did the bull call spread. They bought the 66 calls. They sold the 73 calls. The expiration date, March 21st, 2025, spending about $1.25 million. The earnings continue to roll. I don't think that the banks here, regional banks, will perform if bond yields continue to go higher, because at some point they're going to face the systemic risk issue. How about Alcoa? Was down initially today because of earnings, but somebody here sees it going higher. Trade wars, tariffs, so aluminum becomes a hotter play. They bought the 40 calls, sold the 45 for the expiration date of April 17, 2025, spending about $1 million. Then we have another one here, Marvell. I like the name. I think that it could have a bit of potential here. They bought the 140 calls for May 16, 2025. Spending about $3.25 million. The chart looks pretty good, but I don't know if it can perform if NVDA goes down. That's the only caveat. How about the TLT? Let's go back to the conversation from the beginning of the video. We said who's lying here. Usually the bond market doesn't lie, and if it's down, then the divergence where the SPX goes higher or RSP goes higher, it's going to be resolved in favor of the TLT, where the TLT continues to go down and it pulls the market down. But here we have somebody who disagrees, says no, the bond market is not getting the memo. And with the threats of Trump lowering the rates and reducing the price of oil, maybe the bond market will change its mind and begin to drop rates and move bond prices higher. In that case, it'll be good for the TLT. So somebody bought the 89 calls. The expiration date of May 16, 2025, spending about $2 million. This one is a really interesting one. It's a neutral trade. It's a strangle for Humana. So somebody bought the 260 puts and they also bought the 330 calls for the expiration date of September 19, 2025, spending about a little over $4.5 million. How would this trade work out? You're looking at Humana weekly chart HUM. So they bought the 330 calls. They bought the 260 calls. You can see the expiration date around September. They think by that time, we're going to be way above 330 or way below 260. And here's by how much for the trade to be profitable. We'll be at least in the bullish side above 375 by then, by September, or below 215 for the trade to be profitable. Could it happen? Yes, there's a possibility. And bear in mind that the trader can close the trade at any time they choose. So if there's a pump in Humana, for example, above 330, now the strangler is paying money, they can just close the trade at that point. They don't need to go above 375. That's just going to be based on the expiration date if they decide to hold. So is it a rational trade? I think so. I think there's a big move coming in Humana. You just don't know if it's going to be up or down. Let's do the bearish trades, beginning with CEG. Here it is again, Constellation Energy. I'm going to do it tomorrow. I'm going to buy some puts here in CEG because it went way too high. I think we get a pullback. The trader here bought the 340 puts. They sold the 320. The expiration date of March 21st, 2025. Spending about $2.25 million. And then we have GLD. So betting the dollar will go higher. GLD bear put spread. Somebody bought the 253 puts. They sold the 244 puts. The expiration date is February 21st, 2025. Spending about $2.5 million. Maybe a bet on the yen maybe going down. BOJ not going to do anything. They don't want to upset Trump, perhaps. So yen goes down, dollar goes higher, gold goes down. Just speculation for now. Then we have ENPH, NFAs. A lot of you love to trade this name. Here somebody thinks that it's going to go down significantly, so they bought the 60 puts. The expiration date is March 21st, 2025, spending about $4.5 million. Then we have another one here, betting against Nancy. I don't know if that's wise, but anyways, VST. Somebody bought the 180 and the 195 puts. The expiration date, February 21st, 2025. Spending about a little over $10.5 million. Let's do the charts and then wrap it up, beginning with the most important indicator, that is the VIX. The VIX didn't change, by the way. It went higher today. Okay, the VIX is breaking out of a falling wedge pattern. So it's kind of contradictory to what happened today in the tape. Just keep that in mind, that because that could be kind of an early warning sign that today's pump was a fugazi. Looking at the S&P, an hourly chart, what do we do here? It keeps going. I'm looking at the MACD, looking at the RSI. Have we seen anything like this before where we see the momentum indicators way, way hot and then we see the tape going higher? Yes, we've seen it in the past. Problem is it doesn't last too long. You're going to get some sort of consolidation or pullback. That's just inevitable. Looking at the daily chart, the RSI here is not overbought. We're challenging the trend that we lost to capture the trend. So that's the next important milestone. Can we close above the trend or close below tomorrow? I would get you back. If we roll the chart back to the summer of 24, we got a similar pump when the market bottomed in August. Let's zoom in that episode in the hourly and see how the chart looked like. So you see the huge pump that we got since the bottom in August. And then you see the MACD indicator shifting from bullish to bearish in a similar pattern to what we got today, resulting in consolidation for a little bit, but then it went down. So since the crossing in the hourly MACD, the chart went higher by about 1.7%. But then it went down from that particular point, the initiation point of the reversal from bullish to bearish, by about 2.75%. So it could be the same case here, where it becomes a little bit frustrating that, hey, the momentum is way too hot, but the chart refuses to go down. But in time, it has to pull back. It has to reduce that momentum and attract new buyers. The Qs, same thing, but the Qs is underperforming today because the majority of the rally happened from the improvement of the breadth. But it faces the same dynamics that we see in the chart of the SPY. Looking at the daily chart, again, the battle is right now recapturing the trend line. We've seen a false close before, and we lost it. Is this another false close and we lose it again? Perhaps. But even if we do, folks, and we go down, it could be another attempt here to attract more buyers in a formation of an inverse head and shoulder, and then higher we go. So you gotta keep that perspective in mind. If you're betting that we lose the trend, don't go crazy like 500 puts, 480 puts. That's not gonna happen right now. You gotta be rational that we maybe revisit the inverse head and shoulder line and then see what happens from that point on. Because it could be, if we break the shoulder line, then we go down, we're probably going to go down all the way to the lower Bollinger Bands if we plug that in. But let's not go ahead of ourselves here. Looking at Apple, you got to be careful because yes, Apple did not close above 225, but it might tomorrow and it might next week before the earnings report come out as the shorts begin to cover. Right now, before you short Apple, even if you want to squeeze a little bit of gains before the report comes out, make sure that the threat of a cup and handle pattern is eliminated. And I don't think that's going to be eliminated until we go, let's say, below 220. We'll see if that happens or not. But right now, there's still a risk to the upside of rebound in Apple. Looking at NVDA, what do we have here? Double bottom at the 100 days moving average, almost above the 50 in blue. And now we have resistance at 146.54-ish. That is sort of a shoulder line. We're trading above 2 days in a row. So the next resistance would be the previous highs around 153. Can we just do it in a straight shot? Or do we give up 146.54 tomorrow? That's a dynamic I want to watch for, because if we give up and print a reversal candle such as a bearish engulfing candle, it could say, wait a minute here, we made a lower high, we don't have the energy to trade above 146.54, we're going to go down and close the gap and maybe lose the 50 days moving average. At that point, if we begin to see that formulating tomorrow, we probably want to fire up the 145, 140 puts as a starter for next week and then see what happens. Because if you look at the hourly chart, similar to Apple, the threat of a cup and handle pattern is not eliminated yet. Looking at the second indicator, which is bond yields, can we say a higher low, at least for now? Let's see how we're going to close the week. But if we do that, anything sensitive to bond yields will begin to suffer. I know the XHB caught a rebound. For example, this is the weekly chart for the Home Builders ETF. It's above the 50 weeks moving average, but it could be a false break above, as we've seen in many charts before. So I would say closing below the 50 weeks moving average tomorrow. And the XHB will tell me that, hey, look at bond yields. If they're going higher, initiate a short in the XHB, because it could be sort of a head and shoulder-ish, and we break below the 50 and we head down in an aggressive fashion. Same goes for the RTY, Russell 2000. A little bit of a rebound today, but it stopped short of the 50 days moving average. So if the TLT continues to go down, I think that the RTY will find it really, really hard to defy that, and we'll go down with the TLT. The KRE, we don't have anything to do here because it is sandwiched between the 50 in blue and the 100 in red. Give me a break either way. I got a trade for you. Break above the 50, we go with the calls. Break below the red line, the 100, then we're going to go with the puts. Look at the XLU. It was a little hot today in the morning, but it gave up the majority of the gains. Why? Because bond yields went back up. So if the XLU loses the 50 days, not weeks, days tomorrow, days moving average, you probably want to take shorts, beginning with Constellation Energy. The third indicator is the dollar. We're all watching the Japanese yen. Right now, it appears as a bearish engulfing candle, meaning the yen goes higher, Dixie flushes down. If that is the case, it'll be good for gold. But a lot of folks talking about the revival of the carry trade from the summer of last year. That's not an immediate threat right now because the zone is a little above here in the weekly chart of the Japanese yen versus the US dollar. What we're looking for is maybe a higher low situation where the Japanese yen begins to find a footing, and then in time, we see short squeezes and such that leads us to the carry trade zone. Then we see chaos in the US market. What is that going to do to gold? If the Japanese yen goes higher, dollar goes down, probably gold is going to break above the resistance here, but I got to see it to believe it, to be honest with you. I'm skeptical that gold will make a break. If it does, then it's going to open up a new trade. We're going to have plenty of gains to come, so you can add to your position in GLD or gold futures. But right now, I'm holding as it is, not adding, not cutting, just holding as it is. The miscellaneous charts about Tesla. Topping in a shoulder, sure. We closed below 417, so the next rational conclusion is we go down to 400, but bear in mind in tomorrow's sessions with the options expiration, it could be sort of a falling wedge that leads to a move above 417. But here's the risk for Tesla on the daily chart. Look at the 50 days. We're way divergent from the 50 days moving average. At some point, you're going to have to kiss the 50. As I'm highlighting before, there was a rally last year around the summer, but then frizzled down and Tesla had to retouch the 50. Could it be the case right now? Sure. But what is the big deal if we go down to the 50 at 389.5, 390? Is that a big deal? No, it's not a big deal. But if we lose the 50, and we see that MACD indicator in the daily kind of reversing back to the downside, it could be an aggressive move to the downside. And I think it's going to, if that happens, it's going to happen because a bad report from Tesla coming out in the beginning of next month. And it could be sort of an inverse ABC breakdown, but one step at a time, folks. BTC, what do we do here? Bullish case, you got the double bottom. We're breaking above 104. We don't have a weekly closing though, so you gotta hold your horses. Bearish case, maybe momentum stalling and reversing back to bearish. Lots of volatility in BTC, so you can't really guarantee one way or the other. We gotta see a weekly closing to be sure. The other chart that caught my eye today is MGNI. This is for Magnite. So I talked about buying trade disk, but I might add Magnite here, MGNI, and if it works better than Trade Desk, I'm just going to stick with it, because from a value perspective, maybe it's a little better than Trade Desk. We see a weekly chart here forming a bull flag. You zoom into the daily chart, maybe we have a reversal from bearish to bullish. So the way I'm going to do it here, maybe follow this trade that we have. Somebody bought the 19 calls today on MGNI for the expiration date of June 20, 2025. They spent about $120,000, so if it closes above 19, if there's a huge breakout and it's above 19, you can exercise and own the shares at that point. So that could be one way to do it. Another way, of course, is to buy the shares, sell some covered calls, set a stop loss. That way, if it doesn't go your way, you get out with minimal damage, if any, really. Let's move on to the conclusion of this video. What do we have in the economic calendar tomorrow? We have a little more than what we've been used to throughout the week. So we have the flash PMI, including services and manufacturing, will be important, of course. We got existing home sales, and we have the consumer sentiment reading, the final reading from the University of Michigan. Any notable earnings on the calendar tomorrow? Yes, we have plenty of them. So tomorrow we're going to have American Express, really important, a pulse on the affluent consumer, Verizon, NextEra Energy, Progressive, Crown Castle in real estate, Las Vegas Sands. All of these are important. So it's going to be another interesting session tomorrow, but the most important thing is, of course, the options market dynamics. Folks, we're just going to wrap it up right here. I hope you found the show informative and you learned something from it. But thank you for listening. Thank you for watching. I appreciate and love all of you. I'll be talking to you again tomorrow. Good night.
Wiffle ball.
Can you lose your rent playing
No,
wiffle ball?
I couldn't lose. That's the point.
No, Mike, you can lose. All right, I watched you. I stood by you while you lost everything before, and I don't think I can go through that.
I wasn't
with you
gonna
again.
lose. Why does this still seem like gambling to you? I mean, why do you think the same 5 guys make it to the final table at the World Series of Poker every single year? What are they, the luckiest guys in Las Vegas? It's a skill game, Joe.
Hello, baby. Yeah, you know, we ain't talking alone. Who's listening? But I don't really know.
But you better tell the SIS to keep out of sight, 'cause I know they're taking pictures on the ultraviolet light.
Yes. Yeah, but these days, it's all secrecy, no privacy.
Shoot first.
That's right. Lay low. Lay low. Right.
on you.